Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Monday, September 12th. It looks like we're going to see a continuation of the heavy selling on Wall Street when the market opens. The resignation of the European Central Bank's top economist on Friday sparked the losses. Jürgen Stark stepped down over disagreements about the ECB's purchases of Spanish and Italian debt. The move reignited fears about the European sovereign debt crisis, sending stocks around the world sharply lower again today. Overnight, the Asian markets posted steep declines, with Hong Kong's Hang Seng Index off more than 4%, and European stocks are following suit. Frankfurt's benchmark DAX index is dropping 3.5% after multiple media outlets reported that German officials are preparing for a potential Greek default. And in Paris, the CAC 40 is tumbling nearly 5%. Moody's investor service reportedly is considering downgrading the major French banks because of their exposure to Greek government debt. The Group of 7 did little to calm the market fears at its meeting on Friday. The finance ministers and central bankers said they would take, quote, all necessary actions to ensure the resilience of the banking systems and financial markets. But the G7 provided no concrete plan to address the concerns about weakening global growth or rising currency tensions. As the European sovereign debt crisis explodes back into the headlines, it's having a major impact on markets beyond just equities. Perhaps the biggest impact has been in the bond markets. The cost of protecting European bank and government debt against default jumped to its highest level in history this morning. It would now cost more than $500,000 to insure $10 million of Italian debt for 5 years. Meanwhile, the news is also taking a toll on the euro. The shared currency is dropping to a 10-year low against the Japanese yen. The euro also slipped below $1.36 against the US dollar earlier, before stabilizing. Overall, the dollar is modestly higher against its major rivals, and that strength is weighing on commodities. Right now, crude oil is dropping about $1 to just above $86 a barrel. Gold is also trading in tandem with other commodities, which has been somewhat unusual lately. It's declining below $1,850 an ounce, as some investors are forced to sell the precious metal to cover losses in equities. On the corporate front, we may be seeing a potential roadblock to a major pending deal in the financial industry. According to the Wall Street Journal, the Federal Reserve is asking questions about Capital One Financial's deal to buy ING Group's U.S. online banking operations. The Fed reportedly is trying to find out whether the purchase would create a bank so large and complex that if it failed, it could jeopardize the entire financial system. Capital One agreed to buy the unit for $9 billion in June. Meanwhile, we also have a big deal in the technology sector to tell you about. Broadcom is buying NetLogic Microsystems for $3.7 billion, or $50 a share. The price tag represents a 57% premium over the semiconductor maker's closing price on Friday, and a 26% premium to its 6-month trading average. NetLogic is soaring more than 50% on the news. As those two companies plan to combine, another business is breaking apart. McGraw-Hill announced plans to split into 2 separate companies. One business will be called McGraw-Hill Markets and will include Standard & Poor's, Platts, and J.D. Power, among other units. And the other company will be focused on education services and digital learning. McGraw-Hill also said it's looking to cut $1 billion in expenses and will buy back $1 billion of its own stock this year. Right now, shares of the information services provider are gaining nearly 3%. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.